Hello traders, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. If this is the first time that you're watching this video, I want to welcome you and thank you so much for tuning in. I also want to take this time to thank you guys for your continued support, because you have no idea how helpful every one of your positive feedback, the comments, the likes, the shares, or even subscribing to my channel has been. So please keep them coming, and I'm going to try my best to keep putting out good materials in my video that will continue to help you guys with your progress as well. So anyway, in today's video I've got a few trading opportunities that I want to show you guys, and I also want to show you guys the results of my signal service. I think we are on the verge of making this month our best trading month in terms of returns, so you might want to stay tuned to see how it's been. So anyway, over to the charts. I'm going to start off today with the US dollar yen, because I think we've got a very interesting setup going on in terms of structure. I think it's purely based on structure and trend continuation trade that I want to show you guys. So anyway, I'm going to flip it over to the daily chart so you can see, kind of get the whole picture of what the market has been doing. So obviously, from here you can see that the market has been very bearish. I mean, I don't have to go through all the process to you, but for the sake of those people that might be watching this for the first time, so we can see the market is, that's the whole point, is to try and establish, I mean that's the whole point of when I do my analysis. This is what I tend to do. I try to establish the general trend in the market, and it's actually easier to do that if you're looking at the whole chart on a daily, on a higher time frame actually. So a 4-hour time frame, daily time frame, you can even go higher depending on what your preference is, but I usually start off on the daily chart to try to get the whole picture, overall picture of what the market has been doing. And obviously, looking at this with my knowledge of structure, I know the market has been bearish, because we had a, I'm not going to use these lines, because we had a move, we had a move right here to the downside. We get a little pullback, and then the market put in a new structure low. So this here, we have a bearish structure formation right here. And for those, if you don't know what a bearish structure is, I think I've made a lot of videos on that. You have to go back to check one of my videos, and you're gonna see what I mean by that. So we had a bearish formation here. So obviously, right, once the market forms a bearish structure, you expect the market to continue to be bearish. So after the bearish structure, we had a little pullback. The market kind of came into a little consolidation in this area right here. Let me just, yeah, the market kind of came into a little bit consolidation here, and then we finally broke to the downside. The market came back. Where did the market come back to? Previous structure support, now turned resistance. So the market kind of reversed and continued the bearish move. We had a little pullback. We didn't get a reversal at the previous structure, but we didn't break the previous high. So as you can see, the market came back, and then we had the market continued to move downwards. So now we've set a new structure low, and then the market is coming back into the previous structure support, which is now going to turn resistance. So now this is where this is where you take your trade, because there is a high probability that the market is going to continue the bearish move right at this structure. But that alone is not enough for you to just jump in the trade. You have to kind of depending on your technical skills, you have to try to look at more confirmations for entry. So what I usually do is, so first of all, the first thing we're going to do is we're going to bring in our Fibonacci retracement, swing high to swing low. Let's look at this retracement. So as you can see, the market came in at exactly the 618 retracement, and that's where the previous structure is. So now you're starting to build a case for entry. You got a previous structure support, which is now going to act as resistance. You've got a bearish market on a higher time frame, and you're going to 618 retracement that comes in at that structure. So you can even do one better, dropping this down to the 4-hour chart and try and look for some sort of sign, depending on the kind of indicator that you use. So if I drop this down to the 4-hour chart and I bring in my RSI, I use the RSI, but not a lot, but it's a very good technical indicator. So if I bring in my RSI, we're gonna see, what can you see? If you know how to read an RSI, what you're gonna see here is massive bearish divergence. I mean, the market continued to go higher, but then the RSI has been showing weakness after we went oversold. So now you've got, you're building, this is you've got a few reasons for you to enter this trade. The bearish market on a higher time frame, previous structure support, 10 resistance, 618 retracement coming in at previous structure, and a bearish divergence on the RSI. Now this is a lot of reasons for you to get on this trade. So if I'm gonna drop this down further to a 1 hour chart, because I think I had there was an advanced pattern, bearish advanced pattern that I've been watching since last week. However, I didn't take the trade because the market was my stop loss would have been more than 100 pip. I think it was the 4 hour chart. So let me go back to the 4 hour chart. Yeah, I think there it is. We have a bearish bad pattern here. Next to A leg, 50% retracement. But right now, however, that pattern is technically it has been invalidated because we've already broken the X leg. So the pattern is no longer valid. So if you're going to take this trade, you're not going to take it based on advanced pattern. You're going to take it based on other reasons that I've just showed you. It's trend continuation trade. So we can see that the market came in. So but we had a break and close above our X leg. So this pattern has technically been invalidated. However, if you still short this market, it's still going to be it's still going to be a good reason to short the market based on other reasons. But I didn't take this trade because it was simply out of my pip range. But this is what I'm going to be what you guys, if you want to keep an eye on this currency pair, we might get a very huge move. I mean, potentially a huge move. I mean, we're looking at 500-600 pips because you're going to be taking off your target at the previous structure low. So it's quite a very big move. And your stop loss is going to have to be a little higher as well, maybe over 150 pips or something like that. But depending on what your trade plan says, yeah, this is a good trading opportunity. So moving on to the next one, pound against the US dollar. I think we have a potential bullish cipher. I think it was on the 1 hour chart. Yeah, there it is. So if I bring in my Fibonacci, I just swing low, so we can see X to A leg. We got the 382 retracement. We got this 127 extension, so that gives us a cipher pattern, a bullish cipher pattern. So let me just draw it out for you. X to A, A to B, B to C, C to D is going to terminate somewhere. Actually higher than that. Let me just bring it up now. You can see 786 retracement of the X to C leg. Yep, there we go. Boom, like magic. So it's going to terminate somewhere around 129.82s. So we've got not a long way to go, but about 100 and about 120 pips. So it might be worth keeping an eye on this one as well. So yeah, so moving on. The next one, it's on the euro dollar. I think we have a bullish Gartley pattern that came within maybe 2 pips of being of completing, but it never completed. However, the market is still around that that entry point. So once the market opens tonight, it might present us with a nice opportunity. Assuming we don't gap lower, it might present us with a nice long opportunity. So X to A leg, we've got a 6-minute retracement. X to A leg, 61 retracement, and we're looking for the 127 extension of our A to B leg. Oops, Fibonacci, A to B leg, 127 extension. So there you go, 127 extension. That terminates somewhere around 129.56. So let me just bring in my mark it out, and you can see. So you can see, well, there's things on the charts not really letting me see it. I think have we actually completed that pattern? Yeah, I think we might have. Yeah, we might have. I thought we didn't. But yeah, anyway, I think I might have drawn my fibs wrong. But I don't think we have. But you can check that out for yourself. So once the market opens, it might present you with a nice long opportunity on this pair as well. So yeah, I think this is it for now. I've got the just one trend continuation, structure based trade on the US dollar yen, and then the 2 advanced patterns on the pound dollar and euro dollar. I think that's it. So anyway, moving on to my signal service. Like I told you, this month is turning out to be one of the best months that we're having. I mean, we're on the verge of touching about 500 pips, which is remarkable considering we're only trading just one strategy. Guys, I mean, people wouldn't realize how remarkable that is. I mean, I know, if you trade a lot of strategy, if any, maybe it's a few strategy, 2 or 3 strategies, you can have a month where you can easily make, if you have a really good month, you can easily make 1,000 pips. That's not that's not out of reach. But considering you're trading just a single strategy, and in 3 weeks time we're on the verge of touching just less than 20 pips away from 500 pips, and we still got one more week to go. We still got 2 open trades, so this month could potentially turn out to be the best month that we've had to date. So anyway, look at these are the trades that I've showed you guys this trade in my I think I did show it in my last video last weekend. I showed these 2 trades that we're waiting for, and I told you guys if those trades turn out to be winners, they could be really big. So as you can see, the US dollar, Canadian dollar, we had the bullish bat pattern, which gave us 2 winners. We gave it 2 target winners, 115 pip. So flipping over to the trade, so this was that's the Aussie dollar trade. This is the US dollar card trade, the one I showed you last week. So the market came back, filled us in our order. So if I bring in the chart, you can see what actually happened. So as you can see, the market came in, gave us a little bit of headache, but our stop loss was never threatened. So the market came back, reversed, and we hit our first target for 44 pips and a second target for 71 pips. And the second one was the Aussie dollar bat. I think that one was still waiting for a second target. So let me bring up the chart. So that was the setup. So bringing on my chart, flipping over to the 4-hour chart, 4-hour time frame. So we can see, yeah, the market came in, and we've taken 57 pips on our first target. We're still waiting for our second target, and if that gives us our second target, I think it's about 90 pips on the second target. I'm not too sure, but that could potentially be a very good returns. Our stop loss have already been rolled to break even. So the worst that can happen is we don't close our second position for break even, which is not the worst thing in the world. And we do currently have a bearish bat pattern on the US dollar CAD as well. So we'll see how that one goes. So anyway, flipping over to our equity curve, so you can see, I mean, we're making a really the last 3 weeks. Like I said, this month has been really good. I mean, it's amazing what can happen when you stick to your rules, like even during the tough times, because now the tough times are gonna start to make sense to you, because this is where you're confident. This is where it's after this that you get confidence in your strategy, because if you look back at your equity curve and say, look, I've been through the worst. I've been through a lot of lows. Like I've been through, I mean, this is a whole 3 months of being mentally tough to stick to your rules. And for you to be able to do that, to look back at your equity curve, you can say, okay, I've been through this. What can't I face? There's nothing we can't face anymore. Because we know if we stick to our rules, this is what we're gonna get. One of those few weeks, one of those few months in a year that you're gonna make a really huge returns. That's what the difference is gonna be. We've had one in March, now we're having one in July. We can potentially expect ourselves to give something back, because it's the natural thing, but it's not something that's gonna be. It shouldn't scare you. We are gonna give something back, but all we're gonna need is just 1 or 2 months like this, and we can be hitting a very good returns by the end of the year. So yeah, trading is not about coming in and making money every week. It doesn't happen that way. It rarely does. You're not gonna come into the markets and make money every week. You just need to have the discipline and consistency to stick to your rules, so that when those good months come, then you're gonna see that it's worth it. Yeah. So, but anyway, like I said, this is it. I haven't really got much to show you guys in terms of, yeah, there's nothing with the 74 trades. I mean, we still got two open positions, so we haven't put that up yet. So as you can see, winning percentage is just 53. It's not something amazing which people try to look for, and a trader, this we're looking for a strategy that has a 90%, 80%. No, you don't need that. An average strategy and good money management, that's all you need. So yeah, this is it, guys. Thank you so much for watching, and until next time. So good luck and good trading, and I'll see you next time.